In today's video, I'm going to be using a trend line. Yes, I said it. We're going to be breaking down when trend lines actually work. So let's get straight into it. Alright family, so we're going to be discussing trend lines and when they actually work. So as you can see, I've drawn up a trend line. I could have drawn it a little bit better, but it doesn't really matter. What you can see about this trend line is that price is respecting this trend line. Every single time it comes to touch it, it's respecting it, apparently. This doesn't work because, you know, it's really subjective. Like you just saw me now, I was moving it like this, saying, is it this, is it that? It's very opinionated, very subjective. And also, when it comes to respecting it, you can see that price dips beneath it sometimes and, you know, so on and so forth. But people normally use this for some kind of confirmation. Whenever price touches the trend line, rejects, they jump in for a buy, put their stop loss beneath the previous low. That's what some of them be doing. What I'm going to show you now is the reason this trend line is working. Okay, the reason this specific trend line is working. I'm going to break it down for you first so you can actually understand what's actually going on here. First of all, you can see every single time it touches this trend line, what do you think happens? People enter into buys every single time. And so whenever they enter into buys, what is being placed under these lows? Stop losses are being placed under these lows. So I'm just going to go ahead and copy and paste that. So stop losses are being placed under every single one of these lows. So I'm going to quickly mark up where all the stop losses are. So normally what would happen, all these lows, there's going to be stop losses, yeah? Because what's happening is whenever price is touching this trend line, is a retail concept whereby when it touches the trend line, people jump in and buy. So whenever they jump in for buys, they either put their stop loss directly beneath or beneath the previous low. So there's going to be stop losses here. So that's number one, okay? So there's going to be stop losses beneath every single one of these lows. But guys, we have to think a little bit deeper into this. So that means in this area over here, there is a liquidity pool. In other words, it just means a pool of stop losses. And you know price likes to trade towards the money. And so if the money is beneath this area down here, this is where they're going to trade into. But I don't want you guys just to think, okay, cool, when it breaks a trend line, which is, like I said, it's not something I use, but, you know, when it breaks a trend line, that it's just going to run the liquidity pool. That's not necessarily what's going to happen. Everything else needs to line up with it. What do you have to look at? Look at this up close candle right here. This up close candle takes out the rest of the money to the left. You can see there's some highs over here, all these different highs. Let me zoom in a bit more. And this is all these highs. Let's just do it from this high here. So you can see right here, what do you see here, family? There's some highs over here. And when price traded up, this up move ran out the rest of the money in this area down here. So this is an up close candle. This is an institutional candle. And so what happens then is when price trades away, they need to come back up to this institutional candle to mitigate their drawdown positions, because when they pushed price higher and then dropped it, they're still in drawdown in this up push over here. They're still in drawdown in this up push over here. So this is why they need to return up to this up close candle first to mitigate and then drop. And in doing so, look at how they did it. They did higher highs and higher lows because of the opinion that was created. The opinion that was created was that higher highs and higher lows means that price is going to go higher. And so when they were doing that, and they look at that, look how they left it here for a little bit of time. So from 7:40 in the morning all the way to roughly about 10:50, they've basically been doing higher highs and higher lows, creating that opinion that price is going to go higher. But really and truly, there's an up close candle here that they need to mitigate. They need to mitigate the up close candle, which is what they did before dropping. This is what they've done. Just a quick interruption in the video. If you are getting value from this video, definitely subscribe to the channel. Let's get this channel to 20,000 subscribers in 2 weeks. Also, don't forget to smash that thumbs up button. Let's try and get this video to 400 likes. And so now check it out. Like I said all the time, you know, you can mark up 50% or you can mark up the open. Anywhere within that last up close candle would be a good point to jump in that trade. So I jumped in here when this wick pushed up. You can see this wick over here, this little wick when it pushed up here. Okay, this is when I jumped in. And as you can see, price now is attacking the liquidity pool. So now you've seen that, I'm going to remove this and then I'm going to show you something else. What else has happened here? There was equal highs over here. And so you guys know what's happening as well. They created equal highs. They ran this deeper into the up close candle and then they dropped price down. So now you have to think about, look at everything that's combined together. So it wasn't just the break of a trend line. It wasn't just the break of this. There's a reason they're doing this. They're creating that liquidity pool here, a pool of stop losses. That's what a liquidity pool is. They're creating that liquidity pool. They've run up into the last up close candle. They've digged into it a few times, as you can see. In digging in it a few times, they created equal highs, ran deeper into this up close candle, and now we're pushing lower. So this is how I would use a trend line. I wouldn't be jumping in off of higher highs and higher lows like what they tell retail traders to do. I will be looking at the fact that they've placed stop losses beneath this low. And because they've done that now, there's going to be a liquidity pool. There's going to be stop losses in this area here for us to go and attack. So this is why I'm aiming right to the lows. For the people that jumped in at this low right down here, at this low, so coming in at 59, they're most likely going to have a stop loss roughly about 50. Okay, so if I push this down to 50, like a 10 pip stop loss, retail traders normally have like a, when I say retail traders, I mean like traders who trade the retail concepts, because we're all retail traders. It's just that we don't trade retail concepts, we trade institutional smart money concepts. That's the only difference. So when they thought that price was, doing high highs and high lows, this is an uptrend, this is going to continue to go higher, we know exactly what's going on. Everything has to align up, and then we attack the liquidity pool. And so this is why this has been a blessed trade. And once it gets down to this level, then you can scale off, and then you can let the rest ride if you wanted to. You move your stop loss into profit. You might want to move it deeper into profit. You might want to move it to this level down here as well, because technically price shouldn't come back down here. If it does come back down here, it's not coming to respond to this, is coming to push even higher. So we're nearly there. We're going to run out these lows. This is where we're going to scale off 80% of the trade, and we're going to let the rest ride. But like I said one more time, everything needs to line up. These highs were created. We ran them out with that last up close candle. We traded away. Then you want to see a return back up to this institutional candle so they can mitigate their position. And when they're mitigating their position, that's when you want to get in your trade. And so when they created these equal highs, you knew they were going to run it. And they generated more highs. This is technically just equal highs. It stayed here for so long. There were so many different touches, but I'm just going to call it equal highs. It looks a lot cleaner. And then they ran it. They ran up those highs. They ran those highs. They ran those highs. And now all we do is just wait, man. We wait. So this is actually when trend lines work. So I'm going to go ahead and neaten up the chart real quick. And then we're going to call it roughly about 10 pips deep as well. So roughly about 10 pips lower than that. This is where you potentially want to be scaling off the rest of your position, or even more of your position. So now all you do is wait. All you do is wait. But I just wanted you guys to see when trend lines actually work. When trend lines actually work. Because, more needs to go into it. More things need to line up. You need to be able to read what's going on here. All right, guys, I've just switched up a little bit just so you guys can see it. This is the liquidity pool here. Boom. So basically all I'm saying is that we've tapped into this liquidity pool and we're violating it. That's why the X is there. We're violating the liquidity pool. We violated all these lows now, so all these can change to X's. So as you can see now, look, we're violating the lows. We're about to violate this one over here. And then once we do, I'm just going to put, I'm going to put an X there now because we're violating the lows. We're going to violate those lows. There we go. Boom. Lows violated. Scaling off 8%, game done, liquidity pool grab. There we go, just scaled off. We're done, we're Gucci. Looking to see whether we can continue to catch the rest of this move. Either way, we're blessed, we're good, we're good. Oh, this is filthy. This is absolutely filthy what they're doing to these retail traders. But anyway, guys, that's going to be the end of the video. Price is most likely going to get down to this 50 level anyway. Yeah, hopefully you guys liked the video. If you did find value in this, then definitely hit me up on Instagram. My Instagram is at MHU_FX. If you want the mentorship, my mentees be loving the source. If you want that mentorship as well, hit me up on Instagram. Again, drop a DM and just type in mentorship. Other than that, guys, have a blessed day, blessed evening, and stay positive, man. Just stay positive, positive vibes, stay in your lane, do your thing. There's power when you operate in your lane. Okay, so don't try to be someone else. It just takes up too much of your time and your energy. Just keep it 100, keep it you. Do you understand? Anyway, guys, blessings, peace out. All right, guys, so here's the final update regarding this GU trade. You can see that it's just blitzed out and smashed all kinds of profit. And price did trade a bit higher, but I was okay because I placed my stop loss above this high. So roughly about 85 over here. And now you can see that price has literally smashed out those lows. It's going to continue to run out the lower side now. So guys, that's going to be the end of the video. You can see that this trend line wasn't used the way a normal retail trader would use it. I use it differently. I know there's a liquidity pool down there and we're about to run those stops. Anyway, guys, enjoy the rest of your day. Peace.